All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Friday, everybody. Today's July 26th, 2024. The top story this morning is inflation once again. We got PCE, or personal consumption expenditures, came out just a few moments ago. That is the Fed's preferred favorite, lovely measure of inflation. Why? Because it's usually lower than CPI. And I guess the Fed likes anything that makes it seem like they're doing a better job. Spoiler alert, they're not. So what did we get? We got PCE came in. It was kind of a non-event. I'm not going to lie. It came in ever so slightly higher than expected. Not a huge margin. You know, the year-over-year numbers were pretty much right in line with what we thought they were going to be. The month-over-month numbers were a little bit hot, like 0.1% hot. Not a huge thing. There's people are out there on X and on TV, depending on their leanings, are trying to say, oh, this is further proof of sustained progress toward the Fed's 2% goal. Or others are trying to say this is proof that inflation is coming surging back. Guys, it just is what it is. It was a ever so slightly higher than expected reading. It wasn't a bad miss, and it certainly wasn't a victory for anybody. It just was what it was. Everybody's looking at the gauge, and if you wanted to say one thing, you're looking at the gauge from this angle. If you wanted to say something else, you're looking at this. Look, guys, if you want to be honest, you got to square up to the needle, look straight at the gauge, and just read what it's telling you. And what's it telling us? Inflation was ever so slightly hotter than expected. That's all. It's not a big takeaway, guys. There's no need to complicate things. It just was what it was. Inflation is coming down. We're largely seeing that. But prices are still going up, which to most people is more important than the rate of change because most people already can't afford what the prices are. And we're seeing that in a lot of these consumer surveys from Michigan. And there was another survey came out recently. I can't remember who did it, that said 3 out of 5 Americans think we're already in a recession. Why? Because for those 60% of Americans, they've been living in a recession for 2-3 years already because they can't afford life. And so they're making a cutback. And even that 3 out of 5 number, I think, is probably a little light. I think it's probably closer to 80% of people are feeling living in a recession. Meanwhile, 20% of people are doing really well because they own all the assets and they're looking at everybody else saying, hey, you poor people, what's wrong with you? How come you can't tell how good you have it? A little bit of gaslighting going on there. Anyways, also going on this morning, Europe is just doing what Europe does, burning things these days. We got French rail has been sabotaged ahead of the opening ceremonies of the Olympics. There were fires started at several key locations along French railways connecting Paris to cities I'm not even going to try to pronounce. Who did it? Take your pick. Everybody's violent over there these days. Oh, maybe it was the yellow vests, or maybe it was the farmers, or maybe it was the black bloc, or maybe it was Russian saboteurs. I don't know. Flip a coin. Everybody just burns and smashes over there because we all forgot how to talk to people. All we do is shout past each other these days and break things and throw punches. And I guess maybe I just remind people that kind of the whole point of the Olympics was to cut that shit out for at least a week every 4 years. Can we have a week every 4 years at least where we don't do this stupid crap? Well, no, apparently not. The people who want to make the whole world worse, they will not let us have 1 week where we can just watch sports we know nothing about, performed by people we know nothing about and don't care about in front of a McDonald's banner, and then TV can go back to being normal. We can't even have that. Can't even have that. Anyway, so that's going on in France this morning. 3M reported their earnings today. They were pretty good. They raised their guidance. Didn't see a lot about earnings growth or anything about revenue growth, but what I did see was a lot about how cost-cutting measures were being successful. Remember, 3M famously laid off tens of thousands last year, 10% of their global workforce. And, well, laying people off tends to help with your numbers, and so 3M is seeing the benefits of that. We also got some interesting stories coming out of China this morning. Remember earlier this year, we were talking about how Apple's iPhone sales in China were way, way down in January and February. And then they came out with some big price cuts for the iPhone, and sales climbed rather rapidly in March, April, May timeframe. So it seemed like the price cuts were working. Now this morning, we got some data that says, no, the price cuts aren't working now. that jump in sales following the price cuts, it was a one-off, a one-time thing. They sold a couple of phones, and now they're back to declining sales. So things are not looking so good for Apple in China right now. Pay attention, all you Apple shareholders. And there's another story coming out of China where the government is considering a 10x increase in the fees associated with trading, with making trades for high-frequency traders. They're sick of the algos moving the markets. It's maybe a little bit of populist policy there, because I don't think high-frequency trading is really popular with anyone other than the people who make money high-frequency trading. And so China is threatening to put them out of business by jacking up the fees tenfold. But of course, the carve-outs are already starting as the Communist Party members do what Communist Party members always do, come up with very popular policies and then give their rich buddies a way to circumvent those. That's very predictable coming out of China this morning. There's more talk about the Bank of Japan. Everybody's wondering, what is the BOJ going to do next week? It's a coin toss. Are they going to hike or aren't they? The yen has been strengthening dramatically over the last few days, late yesterday notwithstanding. So everybody is kind of expecting the BOJ to tighten rates a little bit. The finance ministry's interventions were effective in strengthening the yen. It got to the point where so many people were being damaged by the finance ministry's intervention that they just decided, you know what, I'm going to cover my yen shorts anyway. That may have contributed to the sell-off in tech stocks on Tuesday that we saw this week. By the way, had a great conversation with my buddy Joe Brown about that from Heresy Financial yesterday on this channel. You can check that one out in the feed if you haven't seen it yet. So we're talking about BOJ this morning. Famous short seller Andrew Leff from Citron Research has been charged with fraud. That's important. We'll take a look at that story. I'm curious what you guys think about that one. We'll talk about that. And ChatGPT owner OpenAI has announced they're coming out with a new AI search bot that, I guess, if you're wondering how to glue your pizza together, maybe you want to check that one out. Everybody was saying, oh no, Google's stock is going to go to nothing off of this. Well, Google stock doesn't really seem to care. It sold off a little bit on the announcement and then it bounced right back. I don't have very high hopes for Search GPT. I need to see the quality of the outputs from these large language models improve dramatically before I turn over my search queries to them. Very famously, Google's search has just been absolutely destroyed by their AI. At this point, whenever I Google something, I have to scroll down a half a page before I even start reading because I don't trust the answers the AI gives me. And, well, I guess ChatGPT is coming out with their search algorithm. That's going to be nothing but that. Use at own risk. We got a lot going on today, guys. How about we shrink my big melon of a head? And how about you hit that big old like button while we're at it? Because it really helps with the YouTube algorithm. And if you're new here, hit that subscribe button right next to it because we do this every day. So I'd love to see you guys tomorrow to have your coffee with the melon heads. And I hadn't shared my screen before the stream. I'm a little remiss this morning. Here we go. All right. The S&P 500 is up 42 points or 0.8% ahead of the opening bell. Stocks are doing okay. Not a big reaction to that PCE reading. I wouldn't expect one because it was kind of a non-event. The Dow is up 263 points or 2/3%. Good morning for the Dow here. The great rotation I'm starting to hear a lot about. People selling out of high-flying tech stocks, getting into some of the dividend payers and even the small caps. Perhaps a little bit of that going on this morning here as the Dow is doing pretty well. And the NASDAQ is catching a bounce up 190 points, 1% higher ahead of the opening bell. Let's keep that in perspective, though. The NASDAQ sold off almost 800 points over the last 2 days. So a bounce of nearly 200 this morning could just be a dead cat before we resume higher. Also, guys, some interesting things happened yesterday. You know, I didn't even bring this chart up. I probably should have brought this chart up ahead of time. I didn't even think of this. The NASDAQ yesterday, check out where the NASDAQ bounced during all of that nonsense yesterday. Oh, come on, TradingView. Don't do this to me. You going to give me the loading screen now? Is this my penalty for not having the chart ready? Yep, TradingView doesn't want to work this morning. There we go. Check out the move yesterday in the NASDAQ. And I just want to point, we sold off really hard on Wednesday. We came down. We started to bounce yesterday. We opened up down a few hundred points. And then the dip buyers showed up. But look where the dip buyers ran out of steam. Right on the 50-day moving average is where the dip buyers in the NASDAQ ran out of steam yesterday. And then, of course, the NASDAQ reversed and ended up closing down for the day. At one point, it was up over 100 points, ended up closing down 100 and change. So some very key points there where the NASDAQ decided to stop. And I also want to show you guys on the S&P chart was also very interesting because we had that big sell-off on Wednesday. That stopped right on top of the 50-day moving average. Then yesterday, the S&P, we had a little bit of an up day for a while. We opened, the dip buyers showed up. They bid up, but they ran out of gas, and we started selling off. But look where it closed. Again, just below the 50-day moving average there. So some technical takeaways from yesterday's price action, particularly in the NASDAQ, although it looks like NASDAQ catching a bounce this morning. Looks like it was pretty much the algos were in the driver's seat yesterday. Meanwhile, the dollar is a little bit lower this morning, 104.3, down 6 basis points. Not a lot of movement. We did have a little bit of a red candle there on the PCE announcement, but again, it only took us a couple of points in either direction. Looking over at the bond market, we've got bond yields are largely lower this morning. The 30-year Treasury is at 4.466. That's down 3.5 basis points. The 10-year's at 4.22, down almost 4 points. The 2-year's at 4.394. That's down almost 5 points. And the 1 month is at 5.376, essentially unchanged. The inversion of the yield curve is now 17 basis points away from the flippening in the yield curve. Looking over at commodities, we have got gold is at $23.75 for spot gold. That's up about $11 and change this morning, almost 0.5% higher for gold. Silver, meanwhile, still in the doldrums here, below $28. Spot silver is at $27.77 this morning, down almost a dime, another 1/3% lower. It's been a rough week for the silver stackers. September copper futures are down 1/4%. October platinum futures also down 1/4%. September palladium futures down 0.5%. And September futures for WTI crude are also down 0.75%, 77.69 for WTI. It's also been a rough week for oil traders as well. Taking a look at that silver chart, guys, that below that red line, that 28.30 level, that really hurts. It's been a tough week to watch. Silver has just been absolutely crushed here, like 6-7 days in a row. Down again this morning. Need to catch a bounce somewhere. Just not looking very good at the moment. Big silver sell-off these last few days, guys. But Bitcoin, meanwhile, is catching a bid. Check out Bitcoin as priced on Coinbase. It's up $1,400 this morning, $67,205. Again, as priced on Coinbase. And noteworthy, guys, is where we caught a bounce yesterday. Bitcoin was selling off pretty hard yesterday, and it bounced exactly on the 50-day moving average before resuming higher. And here we are up big against this morning. So some signs of life in the technicals of the Bitcoin chart this morning. Now let's get into the inflation number here. The annual PCE, or personal consumption expenditures inflation rate in the U.S. decreased to 2.5% in June of 2024. That's down from 2.6% in May and in line with market forecasts. So the headline PCE number at 2.5% year over year, down a little bit, exactly where the analysts thought it was going to be. So, that's the most important number, the headline number. It is showing slight progress, sustained. Is inflation moving sustainably towards our arbitrary 2% target, Jerome Powell? I guess if you say that, let's zoom out to a 5-year chart. What do you guys think? Does this look like it's moving sustainably towards 2%? Maybe. It's taking a sweet-ass time getting there. It's probably not going to get to 2% for another year or two at this rate. But again, keep an eye on those rent numbers, guys. The last CPI report, we finally saw a break in those month-over-month numbers for rent, so we could see a deceleration to the downside in the months ahead. But this data point, not really all that important, to be honest with you, pretty much in line. Now, the reason I said it came in slightly higher than expected was because the month-over-month number for headline PCE did come in a little bit. It increased to 0.1% in June from 0.0% or flat in May, and that's also slightly higher than the 0.0 that was expected. So on a monthly basis, a ever so slight acceleration of inflation back up to 0.1% from nothing. Again, nothing to be too alarmed about, but it is hotter than expected, so it's worth pointing out. There are a lot of people who just want rate cuts no matter what, and so they're going to look past this little detail because it doesn't support their narrative. We just look straight at the gauge here. We don't try to skew it one way or another. Looking at core PCE, which strips out food and energy, which are more volatile. Core PCE inflation for the U.S. economy was unchanged at 2.6% in June. That's the same as May and slightly above the forecast of 2.5%. So no more progress on core inflation. We've got a little bit of progress on headline, but core is sticky at 2.6, slightly higher than the 2.5 expected. So again, this is why I say slightly higher reading, but I'm not about to get excited about it either. This doesn't mean inflation is coming raging back or anything like that. Just means it's not coming down as fast as we thought it would. And also on the month-over-month basis, same thing. Core PCE came in at 0.2%. That is higher than the previous month's reading of 0.1% and higher than the 0.1% that was expected. So even core monthly numbers slightly higher than expected at 0.2, up from 0.1. So take this all as a whole, all of these data points combined, it's an ever so slight miss on inflation to the upside. Not worth getting too excited about, but also it's not exactly honest to just disregard a higher than expected inflation print and say onward with the rate cuts because, well, that would be dishonest. And, well, we try not to do that here. By the way, speaking of rate cuts, guys, the odds of a rate cut in July next week at the Fed is currently pretty much nothing. Only a 6.7% chance that they cut rates next week. The market seems dead set that there's going to be no action from the Fed. But September, now we're looking at basically 100% odds of a rate cut. We've got 87.7% odds of a 25-point cut. We've got an almost 12% chance of a 50-point cut. And you even got a slight possibility here of a 75 basis point cut. So it really looks like September is happening here, unless we get some kind of a surprise data. This PCE number coming in slightly higher than expected is not going to be enough to change any of these probabilities. That's just my opinion. All right, shifting gears to Europe. Paris trains hit by sabotage ahead of the Olympic Games. No official statements over who might be behind the attacks. Does it even matter? Everybody hates each other and everybody's getting more and more violent and petty and angry. And it's just a statement about how awful we are as a civilization that we can't even have 1 week of stupid McDonald's ads and sports we pretend to care about. Can't even have that. They got to burn things on the train tracks. Got to love what's going on in the world of politics these days. Trains to and from Paris, including the International Eurostar service, were hit by what authorities called a massive attack aimed at paralyzing the network of France's superfast trains just hours ahead of the inauguration ceremony of the 2024 Olympic Games. Let me just add, guys, luckily no reports of any injuries or fatalities, so at least nobody was hurt here. Coordinated malicious acts targeted several TGV lines last night and will seriously disrupt traffic until this weekend, French Transport Minister Patrice Vergret, I can't pronounce anything in French, wrote on a post on social media network X. Fires were set off at 3 critical rail line nodes, with people seen fleeing the sites in vans. The head of the National Rail Company said in a TV interview, the sites were chosen to have heavy consequences on the traffic. He said the company will have to repair its network cable by cable, he said, adding that many trains will have to be canceled. About 800,000 passengers will be affected. It's absolutely appalling, French sports minister, something I can't pronounce, said. Acting against the games is acting against France. It's acting against your own camp, your own country. They are not the games of a government. They're the games of a nation. This map here is showing the rail lines that were hit, again, connecting Paris to several cities that I'm not even going to try to pronounce. There have been no official statements over who might be behind the attacks. Paris prosecutors said in a statement that they are investigating the matter. Over the past few weeks, French government officials have evoked the possibility of the far left or Russia trying to sabotage the games. Interior Minister Gerald Darmanin told RTL Radio on Friday that 4 attack plans targeting the Olympics had been foiled in the past few weeks by his services. And, well, that's just the latest chapter in the never-ending story of people being awful to each other. Can't even have the Olympics without somebody burning something these days. Gotta love it. Shifting gears to earnings, we got 3M raises their annual profit forecast on cost cuts, demand recovery. To be honest with you, I didn't see a lot in this article about demand recovery. I did see a lot about cost cuts in here. Industrial conglomerate 3M raised the lower end of its annual adjusted profit forecast on Friday, looking to benefit from its restructuring measures and increasing demand for electronics sending its shares up more than 7% before the bell. The company last year cut its global workforce by 10%, switched to an export-led business model, closed several facilities, and spun off Solventum, which helped it to navigate a slow demand environment. To drive growth, the company shifted its focus to high-growth businesses such as automotive electrification. Is that even a high-growth business anymore? Maybe, I guess, but the growth is a little disappointing. And growth areas such as climate technology, again, I'm not sure how sustainable that growth is there, while exiting less profitable consumer product lines, Under CEO Bill Brown, who took over in May, 3M expects to further reap the benefits of streamlining by way of lower costs, even as steady price increases helps it offset slow demand in its consumer and industrial businesses. And isn't this just amazing here? They're exiting consumer businesses and they're doubling down on what? On automotive electrification and climate technology, two industries that are having the heck subsidized out of them by your tax dollars, or should I say inflating away your dollars through borrowing money and printing it. And what are they doing? They're able to offset lower costs and steady price increases. And I guess when your industry is being subsidized and when companies are being incentivized by the government to buy your stuff, you can afford to raise prices because the government is interfering with price signals. And so 3M is able to keep raising the prices because they're selling to subsidized industries like EVs and climate technology. The company expects full-year adjusted profit to be between $7 and $7.30 per share, above its previous forecast of $6.80 to $7.30, so they're raising the midpoint there. It reported an adjusted profit of $1.93 per share in the quarter, slightly above estimates of $1.68. Second quarter adjusted revenue of $6 billion came in above $5.8 billion. So 3M stock doing pretty well this morning, up over 7.5% ahead of the opening bell here, almost up 7.75%. Stock's still running, up $8 to $111.43 after closing at 103 yesterday. So a good morning for 3M shareholders. Not so much so for Apple. Apple iPhone drops from China in the top 5 as local foes rise. China's smartphone market is growing at an accelerating rate, but Apple saw shipments slip in the quarter, highlighted by the 618 sale. I'm not sure what the 618 sale is, to be honest with you. Apple lost ground in China's smartphone market in the June quarter after local companies like Huawei Technologies surged ahead. iPhone shipments there slid 3.1% during the period, compared with an 11% year-on-year rise among Android-powered competitors. That's according to a market trader, IDC. That squeezed Apple out of the top 5 handset makers in the country for the first time in 4 years. They continue to lose market share in China. The closely watched iPhone, central to Apple's consumer electronics empire, has struggled to sustain its usual popularity in China this year, with retailers and Apple itself resorting to deep discounts. The country's troubled economy has contributed to a slowdown in sales, while domestic champion Huawei led a resurgence in Android alternatives. Market research firm Canalys reported a 3.9% decline in iPhone China shipments in the period, and Counterpoint Research, which tracks sales to end users, saw a 5.7% drop for the iPhone. Just months ago, Apple seemed on a path to recovery when Beijing government data showed a surge of more than 40% in April and May, but shipments dropped last month due to profitability concerns among its local partners. So those big price cuts that Apple made, it seems like it's not enough, or maybe it was too much of a price cut. Now the retailers can't turn a profit when they sell the things. Either way, whatever that surge in sales was came off the initial cutting of prices. It looks like that has now worked its way through the system, and Apple is back to losing market share. Although apparently the message has not reached Apple shareholders this morning, because the stock is up 0.9%, trading at $219.45, up almost $2 this morning. Also coming out in China this morning, China weighs a 10-fold fee increase on high-frequency traders. China is considering a fee hike of at least 10-fold on high-frequency trading in its latest attempt to rein in some quantitative strategies deemed by regulators as a threat to fairness in the nation's retail investor-dominated stock market. The China Securities Regulatory Commission and the country's stock exchanges have consulted some market participants on draft plans to raise a 0.1 yuan, which is about 1.4 cent, fee on buy and sell orders to at least 1 yuan if the transactions meet the threshold of high-frequency trading. according to people familiar with the matter who requested not to be named because nobody ever names their sources anymore. Regulators also floated the possibility of granting exemptions. Oh, there it is. They're so predictable, aren't they? Granting exemptions if an account's monthly turnover rate is lower than 4 times its total holdings, a level that would help avoid unwanted impact on mutual funds that also use computer programs to generate automated trades, the people said. Revisions are still being made, and the final version could be subject to change, they added. And I have to say, WTF is the freaking point of raising the fees to squeeze out high-frequency traders if you're just going to write in an exemption for hedge funds, which are the people who do this. They're so predictable. They're so predictable. So basically what they're doing is they're just going to pick their buddies. Whoever's in with the party will be granted an exemption from this, and everybody else is going to have to pay. And it's just going to create an even more lopsided market because they pick and choose who they're going to enforce the law to. They're so predictable. Every time they pass a law based on some kind of popular sentiment in the back page or in some last-minute amendment or something, they put a carve-out in for their buddies that lets them keep doing what they're doing. Anyways, guys, I could go either way on this whole thing. What's your opinion on high-frequency trading? Should it be banned? Shouldn't it be banned? The libertarian in me, the small government guy in me says, should the government ban? No, stop. I don't even need to hear the rest. Should the government ban anything? No. The libertarian in me says no more regulations. We already have too many. At the same time, all of the over-regulation in other corners of finance has created these giant megalith firms that can afford to create these high-frequency trading programs and move money around like this to the point where they're only harvesting fractions of a cent, but yet it turns into millions, even billions of dollars over time because they do it so much. And so it's government over-regulation that created this whole situation to begin with. Maybe we should crack down on it. I could go either way on this one. Let me know what you guys think about this. I generally don't like the concept of computers making trading decisions. But like I said, I could go either way. And I certainly am not in favor of granting carve-outs to connected friends of the CCP. All right, still in Asia, but slightly back towards California here. Let's talk about Japan. BOJ to weigh a rate hike next week and details a plan to have bond buying. I should say to halve bond buying. They're cutting it in half. Look, a lot of speculation on what the BOJ is going to do. Nobody really knows yet. It's still up in the air, but this is very important because I think we saw the yen actually have a big impact on U.S. equity markets this week. That big sell-off we saw on Tuesday, I think the yen played a role in that. The Bank of Japan is likely to debate whether to raise interest rates when it meets next week and unveil a plan to roughly have bond purchases in the coming years, sources said, signaling its resolve to steadily unwind its massive monetary stimulus. The rate decision will depend on how long the board members prefer to wait for clarity on whether consumption will recover and keep inflation stably around the bank's arbitrary 2% target, said 4 people familiar with the BOJ's thinking. How do you get that, by the way? How do you become a person familiar with the BOJ's thinking? Is there like a course or certification you can take to get that? Anyways, nobody ever names their sources anymore. They just get more creative with their anonymously sourced articles. Over 3/4 of economists polled by Reuters expect the central bank to stand pat this month and possibly even the next move in September or October. But sources suggested the outcome of the July 30th and 31st meeting was considerably less certain. The decision will be a close call and a hard one to make, given uncertainty over the consumption outlook. One of the sources said it's really a judgment call in terms of whether to act now or later this year. So they still don't know what the BOJ is going to do with rates. Are they going to leave their target rate flat at nothing? I don't know. But if you look, guys, the yen has been very active this week. It's down a little bit this morning. It's at 153.85, which is, down a couple of basis points here. The yen did catch a little bit of a bounce yesterday. You can see the big wick at the bottom of this candle here. It did come almost down to the 200-day moving average before the yen caught a bid. That was largely after the hotter than expected GDP print from the United States came out. That sent the dollar surging a little bit and took some of the oomph out of this move in the yen. But still, just a massive move downward, or I should say a massive strengthening of the yen over these last few days. This is USD JPY. Remember, guys, when you see this chart going down, it's the yen strengthening. So will the BOJ add to that by hiking rates? Maybe not seems to be the message, but this is an important chart now, guys. This is one of the most important charts in finance, especially because of the lopsided positioning and the crowded trades here in the West and how many people are trying to pick up pennies in front of steamrollers right now. A significant strengthening of the yen or continued strengthening of the yen could spark a wave of selling in U.S. equity markets. Also going on, U.S. accuses prominent short seller Andrew Left of fraud. Guys, I'm not going to get too much into this one. Let me just say what they're actually targeting this guy. Andrew Left is the head of Citron Research. He's kind of been out of the news for like the last 10 years or so, but he was very big in the last decade in the 20-teens. He's the one who published a famous short report on Valiant Pharmaceuticals, basically took that company down, destroyed them. The Justice Department has seized hardware, trading records, and private communications as prosecutors look for wide-ranging conspiracies and evidence of market manipulation, the Wall Street Journal reported 2 years ago. Prosecutors also accused Left of hiding ties to hedge funds that got early notice of his research and in some cases passing off their trading ideas as his own. So if he's coordinating with hedge funds, giving them previous knowledge of what he's about to publish, knowing it could move markets and so they could pre-position, that is absolutely securities fraud if that's what he was doing. The hedge funds traded in advance of his reports becoming public and shared a portion of the profits with him, the indictment says. Oh, that is definitely securities fraud. When asked by federal investigators in January of 2021 about one of those episodes, Left lied and said he never gave prior notice of a report to a hedge fund in exchange for compensation, according to the indictment. Left also misled the market by disseminating reports that suggest he managed money for other investors when he only invested his own funds, according to the indictment. Short sellers have long served an important role in the markets. Betting stocks will fall in price can help investors hedge against risks, identify overpriced shares, and even root out fraud. Shorts warned investors about the 2008 credit crisis and helped reveal scandals at Enron and Wirecard. I echo that sentiment, guys. Short sellers do play a vital role in the market, especially in sniffing out fraud. Shout out to Viceroy Research and Fraser Perring, who have done a fantastic job on the Steward healthcare scandal. There are good ones, and like everything else, there are also bad ones, and it looks like Andrew Left has not been above board about what's been going on at his firm. Short sellers say their research enjoys free speech protections, I agree, but corporate executives often complain that they exaggerate a company's problems or mislead by publishing more than they really know. Left has long described himself as a publisher, and his website describes the limits of what he reveals. The site says Citron Research will not report when a position is initiated or covered, the tactic that prosecutors now say was deceptive. In one instance cited by prosecutors, Left shorted American Airlines stock in June of 2020, a few months after the pandemic caused airline stocks to decline. In a message he wrote on Citron's account on Twitter, now known as X, that Left predicted that American would fall 50% to $10, but Left bought options that only required a small decline in price to pay off. And within 10 minutes of posting the tweet, Left closed out most of his bet on American shares, and he dumped the rest within a half hour. In other words, he was using people who read his tweets as exit liquidity. If that's really what he did, then throw the MFer in jail, is my opinion, because there are too many people out there that are either just talking up their book or advertising a trade when they're secretly taking the other side of the trade. Shout out to you, Bill Ackman. So if that's really what he did, then I'm of the opinion of screw him. Let him rot in prison. Abso-freaking-lutely. I just want to say thank you very much to M&J. M&J, you're so awesome. Thank you so much for your continued support of the channel. I really appreciate that very much. Guys, if you got one of those Nobody Special Finance memberships from M&J, say thank you in the chat. I appreciate that, M&J. Thank you for everything you do for the channel. Also, your services as a moderator, keeping things neat and tidy in the chat. Thank you so much for that. And thank you to ND22121. How binary? Thanks for the help about MBS and question about MBS and lower house price. Was that you in the comment yesterday asking about how the Fed dumping mortgage-backed securities could cause lower home prices? Okay, let me recite that since you, and by the way, you're very welcome, ND. I got a question yesterday about how the Fed dumping their mortgage-backed securities could lead to lower home prices. Well, when banks write mortgages, They don't sit around and wait 30 years to get paid back. Banks, as you saw in The Big Short, they take those loans, those IOUs from you, the mortgage holder, and they package them up into bonds, and they sell those bonds to investors so they can get the money back right away and then go make more loans. All right. So as long as the investors are buying those bonds, the banks can continue to do that. Well, the biggest holder of mortgage-backed securities in the freaking world is the Federal Reserve, which means the market for those mortgage bonds is being artificially inflated by the Fed. And if the Fed were to sell those mortgage bonds, it would undoubtedly lower the price significantly on those, which would raise the interest rates on them. And so the banks wouldn't be able to make as much money selling those mortgage bonds into the bond market because they'd be going down in value. So the banks would have to be much more careful who they loan money to. They'd start to issue fewer loans, which would make mortgages hard to come by, which would force home prices lower. When you artificially pump liquidity into the bond market, what you're doing is you're subsidizing higher home prices. And, you know, all this talk, all the politicians who pay empty lip service to wanting lower home prices and wanting more affordable housing, and we need to do something about the housing affordability crisis. They're all about subsidizing rent and rent controls and this new program to just arbitrarily print money and give it to people to buy houses. All things that drive home prices higher. Nobody ever talks about getting the freaking Federal Reserve out of the mortgage bond business, which would instantly start to lower home prices. But here's the thing. We say we want affordable housing, but really, I don't think most people really want them. Most people really want their homes to keep going up in value endlessly. Well, that's great for homeowners, but that's terrible for homeowners' kids who can't afford to buy houses. So until we get serious about affordable housing and get the Fed the hell out of the mortgage business, homes are not going to be affordable. Thank you very much, ND22121, for the super chat and support of the channel, and you are welcome for the answer. Cole Marsh, thank you, sir. He says, wild weekend ahead. Stay frosty, but have fun. Love you. Cole, appreciate the good vibes every morning, brother. You, sir, are a silver lining to the great big gray cloud of people being miserable to each other. So thank you, sir, for being an awesome guy. I appreciate that very much. And thank you to Learsey, who says, been a member for 5 months. Thank you, Learsey. He says, can we get an update from Tom the car guy? All right, calling out my boy Tommy for an update on the auto market. You know what? You ask, you receive. I am going to shoot Tommy a text as soon as this live stream is done, and we're going to set something up. We're going to get my buddy Tommy from Car Concierge Plus on to talk about the state of the car market, because Tommy buys a few hundred cars a year, so he sees it before we do. That's a great idea, Lucy, and thank you for being a Melonhead member. Water168 says, any prediction for Microsoft's upcoming earnings release? You know, I think Microsoft's earnings are probably still going to be pretty good. OpenAI is still redeeming their credits for free data center rentals, right? When Microsoft bought a big chunk of OpenAI, the cover story was they paid $10 billion for OpenAI, but really they only paid $1 billion. And then they gave them $9 billion of credits for data center rentals, i.e. coupons for free data center rentals. And then as OpenAI redeems those credits, Microsoft books it as revenue. It's one of the ways they're round-tripping their money to make themselves seem more profitable and to artificially inflate the demand for data centers, which is driving NVIDIA's earnings and Microsoft's earnings. So that is still going on. So I think Microsoft's earnings will probably still be pretty good, probably still some impressive growth. But there's a big question mark now. The market is starting to get very skeptical of the over-promising and under-delivery of AI promises. And so even though Google and Tesla reported halfway decent numbers, their stocks got clobbered because the market is starting to see through that BS. So that's a big question. I think the numbers from Microsoft will still be pretty good, but the question is, what will the reaction to those numbers be? And another big question is, what is Microsoft going to tell us about their CapEx, their investments in AI hardware, because that's going to give us a clue about what NVIDIA's earnings might do. And as goes NVIDIA, so goes the whole market. Google is still investing billions every quarter. Tesla is still investing billions every quarter. Microsoft probably doing the same thing, which means NVIDIA's numbers are probably still going to be pretty good. But again, the market is starting to see through it. Thank you, Water168. Appreciate the super chat and the support of the channel. And thank you to Zeeble Fritz, who says high frequency trading is out of reach for individuals. Ban it. All right. So one guy in favor of the level playing field. I agree. I tend to agree. Let me just say that. But when they say ban it, do not carve out exemptions for your politically connected buddies like the CCP is doing. But I agree with the sentiment. The stock market should be a level playing field. It is clearly not. We've seen grotesque examples of markets being rigged against the little guy. Thank you, Zeeble Fritz. Appreciate the super chat. Thank you very much to Metal Seer, who says 618 is a shopping festival by JD. All right, shows you how much I know, guys. I am immune to marketing. I don't know if you guys knew that, but I cannot be marketed to. I'm just too cheap. And so I tend to just not pay attention to marketing gimmicks like Prime Day or the 618 Shopping Festival or, oh, we're having a special 20% off our arbitrarily priced item that just rose by 20% a week ago, and now we're marking it 20% off back to where it was last week. I can't be marketed to. I'm just too cheap. But thank you for the clarity, Metal Seer, and for the super chat, sir. Appreciate that. And he's back saying JD equals something, one of the largest e-commerce companies in China. I am familiar with JD.com. I didn't know about 618. They're kind of like one of those Alibabas, right? Like an Amazon of China. They're not very big here, but they are huge over there. Thank you for the clarity, Metal Seer. I appreciate that very much. And thank you, everybody, for having your coffee with the Melonheads this morning. You guys are awesome. Thank you so much for all the super chats and the support of the channel. Also to my channel members and magnanimous Melonheads on YouTube and Patreon. Thank you guys for supporting the channel. Appreciate that very much. Hi, Mom. Hi, Dad. Love you guys. I'll be back at 3:15 p.m. Eastern Time for my weekly wrap-up live stream in just a few hours. Till then, live small and dream big.